Good morning, everyone. For the record, it is June 3rd, 2021, and this is our weekly Business Development Advisor and Affiliate Marketing Office training. We have on today Kai-Zen, and we're really excited to bring them on and what they do. We've used them in the past, and we've had agents that highly recommend them and have used them as well. So we're excited to kind of get a formal introduction, and I know they've been growing a lot. So this is also an introduction to Jeremy and Richard because they're going to be our point of contacts for the NIW group of offerings. And today we're specifically going to go over Kai-Zen, but I'm gonna ask a bunch of questions as we're going through it. I know this isn't gonna be like a completely formal presentation, but I will let Jeremy get through what he needs to, and then we'll ask some questions. And this is recorded, so everyone knows. I will put this on our unlisted YouTube channel so that you guys can get access to it. But again, we're really excited to bring in Kai-Zen. They've been a partner of ours for a couple of years now, and we've known about them beforehand, but kind of formalized a relationship at that point. And they have a very unique model for what they're doing in the premium financing space. And we're excited to be able to introduce them. This is something that everyone should be aware about, because when you're dealing with the agents that you are, premium financing is going to come up, and it's not everyone's familiar with it. So if you're listening to the cases and hearing how the case is laying out, knowing the parameters, especially with Kai-Zen, of what that looks like, you can make a good recommendation that's going to be better for the client, better for the agent's pocketbook, which also means better commission, the override for you as well. So without any further ado, I'm going to bring on Jeremy. He'll introduce himself and Rich real quick, and then we'll walk through this presentation, and then I'll ask some questions. And then if you have some questions as well, after the recording, you can touch base with me, or hopefully I'm not adding too much work onto Jeremy and Rich, but you could of course touch base with Jeremy and Rich as well. That's the advantage that we have working with them, so that you can make sure that you're getting the right information for the agents and agencies you're working with. But without any further ado, Jeremy, I'm going to pass the reins on to you.
All right. Thank you so much. Thank you so much, Nathan. Yes, my name is Jeremy Bickler. I'm the sales VP of the Central Region here at NIW. With me on the call also is Richard Pascal, who works with me in the Central Region. We're essentially going to be your point of contacts.
I'll just say hello for a moment and get off here.
Sounds good.
Yeah. You okay? Perfect. I froze there for a second. I had an internet hiccup, so just wanted to make sure we're okay. So thank you again. So yes, as Nathan mentioned, NIW is what is technically called a premium finance vendor. We've been doing this for over 21 years. We have over $5 billion loaned out. We have several offerings or platforms, if you will, traditional premium financing to income plays. But today what we're going to do is focus on the one that is unique and unlike any other financing platform, and we'll discuss why, and that's our Kai-Zen platform. So before I get into a case study or any of the nuts and bolts of it, I think it's important to discuss foundationally why Kai-Zen is here, more importantly, what Kai-Zen is trying to accomplish, or the problems and solutions or the problems, excuse me, that it is trying to solve. So first and foremost, Kai-Zen is an income play. 95+% of the sales are specifically for income. Of course, it is a life insurance play. There is a wealth transfer there. We can use Kai-Zen for protection focused needs, but it is a very small part of the sale. So knowing that it is generally, from a main perspective, an income play, let's actually start talking about when we talk about retirement or our income output in retirement, where you're investing. What I mean by that is the product you're investing in, the return you're getting is actually only affecting 26% of your income. Unfortunately, that is where the conversation gets dominated, though. financial advisors say, I can provide a better vehicle for you. I can provide a safer vehicle for you. I can get you a better yield. And I'm not saying they can't. I'm saying the only problem with that is it is still only solving 26% of the problem. What is affecting 74% of your income is how much you invest. But again, I think you'd all agree that the conversation it's been dominated by the 26% is I can do this for you better. I've got a better product, et cetera. So again, it's not about whether or not those advisors or people can or cannot do that. It's really about why aren't we focusing on the 74%? How much you invest. So let's expound on that a bit. On average, and again, I'll look at myself here, for example. I'm mid to late 40s. If I take a look at my retirement, which the average retirement, by the way, is about 22 years. And if I want to live off of about 80% of my current income, it's going to cost me anywhere from 6 to 8 times what my house is worth right now. But all the financial advice expects me to save all of that myself. In fact, 90% of even the highly compensated professionals are only saving 9 to 12% of their salary. The actual average American only saves 5%. So if an average exec makes 220 grand a year, if we apply some of that math that I talked about, at 22 years in retirement, living off of approximately 80% of your income, they're going to need to have upwards of $4 million in retirement. Now that's ridiculous, right? They need to be saving 20, 25, 30%. That's an issue. That's not part of the solution, is to say, well, you just need to be saving more. And in fact, you should actually be saving a quarter of your salary. So how do we fix this? And this is specifically what Kai-Zen is trying to accomplish. Kai-Zen is going to take the 9 to 12% the advisor can save and leverage on top of that up to 3 times. So because of that leveraging, participants receive anywhere from 60 to 100% more supplemental income. It also increases the valuable protections that come with life insurance. Again, we know we're using an IUL chassis here, so it's providing a death benefit. So you're getting more death benefit because of the leveraging and more of those living protection benefits as well. So how are we doing this? This is where a lot of the successful advisors that are selling a lot of Kai-Zen, this is where they'll ask the question, did you pay cash for your house? Or do you know anybody that paid cash for your house? And I think you'd all agree on the call that generally the question is no. Even if you could pay cash for your house, you generally didn't. You utilized a mortgage. You utilized a mortgage to buy a bigger house, a better house, a house that more suited your needs in an area you preferred. As a matter of fact, we are actually utilizing leveraging every day. We're home loans, credit cards, business loans, car loans, boat loans, lines of credit, margin loans on our investments. But why are we not utilizing loans for our benefits? Are we utilizing leveraging? That's essentially what Kai-Zen is. Kai-Zen is going to take your traditional max fund, minimum death benefit, max cash IUL, and we're going to leverage up to 3 times on top of that. However, and this is where it becomes very important and where Kai-Zen is different than any other premium finance out there or platform out there, even the ones that are small case like Kai-Zen. First and foremost, your client is not signing loan documents. He or she is not a party to the loan. There is no credit checks. There is no personal guarantees, which would be collateral calls as well, correct? None of that, and no interest payments. With Kai-Zen, the policy is the collateral. So just like when I'm using the mortgage analogy again, you put X amount of money down on your house, the lender borrows you the rest of the money, the house is the collateral. Well, in this scenario, because of the unique funding structure that I'll show you in a second, the policy is the collateral. And the funding ratio specifically is what protects the lender against that. So let's actually take a look here. The piggy banks with the parachutes represent the leverage dollars. The piggy banks with the dollar bills, or $100 bills on them, represent the client's out of pocket. So again, I mentioned this is a 10 pay. So years 1 through 5, the client is going to pay anywhere from 50 to 60% of the premiums. As a matter of fact, generally speaking, the client's going to tell us or discuss with you, the advisor, how much they want to, excuse me, put in. We're going to leverage on top of that years 1 through 5. At the end of the 5th year, the client is now done. The client's out-of-pocket obligations is now complete. Years 6 through 10, as again, you can see by the piggy banks with the parachutes, we are going to leverage all of the premiums. So this is where your 3-to-1 leveraging comes in. Client pays 50 to 60% out of pocket years 1 through 5. We leverage the rest. Years 6 through 10, we leverage all of the premiums. So what we're doing essentially does not change the structure of the IUL contract. It's the same tax treatment, which we know Section 7702 says loans from an in-force non-MEC life insurance plan are tax-free. The same flexibility, the same access to living benefits. We just have a policy that is now collaterally assigned in the early years. We're utilizing, and by the way, I should stress this, NIW does all of the designs. What I mean by designs, the actual illustrations. It's a proprietary design. It's goes on behind the scenes. It's going to vary by age, but essentially it's a little bit more than just your traditional minimum option B. A lot of things may be going on down the road there once the policy's in force. So as the plan administrator, we are there for those 15 years too. It doesn't matter, even if the advisor no longer has a relationship with the client, and there's a BDA switch or a death benefit drop or getting some term blend out, we are doing all of that stuff. So essentially minimum option B death benefit, the design is going to vary. We are going to use an early cash value or a waiver of surrender charge rider. Every carrier calls them something different. I think National Life calls it the business builder. Allianz Life calls it the enhanced liquidity rider, but essentially what it is, it's a waiver of surrender charge rider. That's what helps the early cash, which ensures that there is no collateral call. I'll start talking about our stress testing after a second, but Kai-Zen does work in the harshest economic interest rate environments as well. Here, I want to go through an actual design, and bear with me 1 second. I'll hop around a little bit. So this is a very typical, what we would see designed from a volume standpoint that we see daily. This is a 40-year-old male. I believe our average age is probably a little bit older than this, mid to high 40s. A lot of numbers here, so don't worry about it. We'll take one column at a time. So first and foremost, column A is the bank loan. It is a LIBOR-based loan plus a spread of 1.75%. That spread has never moved. Even the 8+-year-old Kai-Zens that are in force are the spread above LIBOR is 1.75. So as you can see, we are borrowing at the minimum today. If you open up a Kai-Zen your first year, you would be borrowing at the minimum, which is 2.75%. So great time to take advantage. We're not going to assume that interest rates are going to stay this low forever. So you're going to see a slight forward rate curve. And actually, this slide here is a little bit outdated. Today's, if we were doing that you would actually see a little more of an aggressive forward rate curve. But bottom line is we utilize projections from like a Bloomberg.com. We're not just showing a flat interest rate on the bank loan. So column A is essentially what the lender is charging for the annual interest rate for the borrowed dollars. Column B is the actual premiums going into the IUL. So again, I mentioned this is a 10-pay. So if you were looking at the actual carrier's illustration, you would see a $51,509 a year 10-pay IUL. However, what's going on behind the scenes, and if you look at column B here, that's the client's out of pocket. So this individual is paying $29,650 a year for 5 years. Column C is what we are leveraging on top of that. So again, when I was talking about that 3-to-1 leveraging, So this is where you see we get the 51,000. The client's paying 29 and change out of pocket. We're borrowing another 23,000 and change on top of that. At the end of the 5th year, the client's out of pocket again is complete. At that point, year 6 to 10, we are going to leverage all of the 51,509. So that is all borrowed dollars. Because of that, excuse me, we're going to generally have a 15-year deferral. And that's not set in stone, but we're not going to illustrate any shorter than that because of compliance, and we like to let these things cook and smoothen volatility. So column D, you're going to see there a one-time. Here, let me actually do my pop my highlighter here. So column D here, that represents the one-time loan from the IUL that is going to use to pay the lender back. So now the policy is free and clear, no longer has a collateral assignment on it. And at this point, even though this individual would only be 55, 56 years old, he or she actually could start taking income. What they could also do is they could let it defer for longer and let it grow. Bottom line is we're going to try and get you into and out of the bank loan in 15 years. From there, a lot of the specific questions that the client may have are, generally speaking, the answers are going to be in these columns. So column E is the actual cumulative bank loan plus the interest. Column F and G is your accumulation and surrender value. As you can see, accumulation and surrender value are the same, again, because we're utilizing the waiver of surrender charge rider. Column H is your surrender value after or net of the bank loan. And the same thing with columns I and J. You got gross death benefit and you have the death benefit net of the bank loan. So let's utilize this scenario here because we get this asked quite often. So this client, let's fast forward 2 years. The client has been paying $29,650 a year for 2 years. He completed that. 3rd year comes along, life happens. Maybe there was a medical emergency. Maybe there was something professionally that happened, but this client is unable to pay the $29,650 year 3. Okay, so we know from column E here, the projected bank loan at that time is about $49,000. We also know, columns F and G here, that there is approximately $92,900 or $93,000 in accumulation surrender value in the policy. So what the lender is going to do, because the client missed a premium payment, is they will exercise a collateral assignment and pull out the cash value to pay the bank back. So you have 93,000 in there. The bank comes and pulls 49 out. The client is now sitting here with $43,947. They could walk away with that essentially, right? There may even be enough cash in there where they could call the carrier, ask to run an in-force illustration. Hey, what's minimum monthly premiums? We could keep this thing going even. Okay. So essentially in this scenario, client put about 60,000 in, a little less, and they could walk away with about 44. I'm bringing this up because sometimes we hear a lot of misinformation and, bad info, if you will, about Kai-Zen, about, if the client misses a premium, they're completely dead in the water. Not the case at all. The general answers to your questions are here. So again, same thing that would happen if after year 3, the client walked away. We knew there's a $74,000 loan. The client misses a premium, he'd be walking away with about 70 grand. Also, let's utilize this scenario that the client passes away after year 2. Again, we know the projected gross death benefit here from is 1.59 million. The first 49,000 goes to pay the bank loan back. The beneficiaries at that point would have the full 1.543 of income tax-free death benefit. So that's essentially the Kai-Zen design is. How we typically start with Kai-Zen is that you've got the client is, I've got a 45-year-old male, a 50-year-old female. They want to put in X amount. to open up the plan. And then we're going to work the design around that. You know, if the client says, I want to put in 30 grand a year. Now, we are going to have minimum premiums or minimum death benefits, excuse me. And I'll talk about that when we go over the kaizenplan.com website.
I suppose since we're on that note, just real quick, once they set the funding, because and I know I already know the answer to this, but I want everyone else to hear it. Is once you set the funding, the client can't put in more. Like say year 3, instead of putting 29,000, they want to put in 35,000 or 40,000. That's set pretty much in stone, right?
Yeah, good question. So the reason why is in this instance, based on this premium or the total premium, right, between the client's contribution and the leverage premium, we are absolutely squeezing this down as much as possible. We want to minimize the cost. So we want as much of these premiums going towards cash instead of paying towards the cost of insurance. So because of that, you couldn't technically put another penny in these plans. They are max funded.
Yep. Absolutely.
And so you, in a sense, the structure here is the client is agreeing to pay, in this instance, $29,650. They couldn't skip a premium or decide to pay minimum premiums or less. You are paying that. But also, that's part of the reasons Kaizen's so popular is because people are like, oh, 5 years. I like that. I'm done in 5 years.
Yeah.
I'm funding part of my tax-free retirement in 5 years, right? And then I have no financial obligations beyond that in terms of collateral calls that you would see in traditional financing. I know that I'm paying for 5 years and I'm waiting for about 15. Good question though.
Other question, excuse me, the cash values for those first years, does the client have any access to those in any year amount?
They do not, because the lender has a collateral assignment on there because we are borrowing premiums. So a percentage of your premiums is money from a lender. So the lender will have a collateral assignment on the policy. So you would not be able to access any of the cash values until that bank is paid back. Now, if the client had an emergency and needed to just bail, right? Just say, hey, I'm done here. Of course they could do that. But just know that the first values coming out, withdrawals or whatever it is coming out to pay the bank back.
Yep. And then,
Okay.
Yep, lost the other question. Never mind.
Oh, sorry.
No, good.
So one of the other things that makes Kaizen a bit unique is let's focus on column C here. You can see these amounts, 23,000 a year and then 51,000 a year. We can't go to a lender and consistently get LIBOR plus 1.75 or competitive rates. Small bank loans we don't think they're safe, even though we have bulk because of our $5+ billion. We are not comfortable with borrowing these low of amounts a year. So what we do is Kaizen is funded in what we call tranches. So if Dave is your client or your advisor's client, his Kaizen is going to fund on the same day as Paul's, Brian's, Scott's, and anywhere from 100 to 200 other policies. They are mutually exclusive. Dave's individual Kaizen trust owns his policy. Do not worry about that as well. This is completely turnkey. The client does not need to get their attorney involved. The advisor does not need to get their attorney involved. The trust fees and everything are included in those clients' 5 years of premium payments. And that the trust gets set up at the end of the process here. So the client is choosing who's the beneficiary of their individual trust. Basically, all it means is there's some security there, knowing that we're not borrowing 20 grand a year or 40 grand a year. We're actually borrowing millions a year because they're going to fund at the same time each year with anywhere from 100 to 200 other policies. And because of that, generally speaking, that bundling, if you will, it optimizes the loan size, it cuts admin costs, it streamlines processes as well. So this is another thing you will hear out there from a misinformation standpoint, oh, Dave is my client, but if Paul passes away or if Paul decides to bail, that's going to affect the whole tranche. Does not happen that way. These are all mutually exclusive individual trusts owning the policies. They're all pooled from a borrowing standpoint by the master trust. So the master trust is borrowing one time each year for every policy in the tranche. Who is the trustee? The trustee is called Provident Trust Group. You all can Google them. They're one of the largest fiduciaries of life insurance policies or funds out there. I believe they have about $4 billion in dollars that they are fiduciary for. So again, Provident Trust Group. Because of that, by the way, this is another point to point out. Let's say your advisor is in Illinois and he's seeing a client that is in Illinois. It is still a Nevada policy because it will end up being a Nevada trust, and the trustee is sitused in Nevada. So any advisor that is selling or promoting Kai-Zen needs to have a non-resident Nevada license. This is attainable generally within 1 to 2 days. You can go out online, you can pay the fee. I don't know if it's $80 up, depending on if you're, doing a corp or an individual. Providing you don't have any background issues, typically you're getting your Nevada non-res within 24 to 48 hours. So just wanted to throw that out there. That's an important point. That regardless of where your client is at, the client can be down the street from you. This is a Nevada sale because that's where the trust is sitused.
Gotcha.
Yep. I guess why would you, want to sell Kai-Zen, or why would you promote this to an advisor? So first and foremost, it is a unique and more efficient way to solve your client's needs. So there's more money, more confidence, and more protection. From a competition standpoint, the advisors find that they're talking a little bit differently. The clients are more susceptible to this type of language, to this type of solution. And again, your clients are getting 60 to 100% more income. It's bigger for the client, which means it's a bigger sale, which means there's obviously more of a commissionable opportunity as well for the advisor. And people love to talk about their Kaizens. They absolutely love to talk about their Kaizens. So you're also going to find from an advisor standpoint that there's referral opportunities here as well. So who are we targeting? So first and foremost, the highly skilled, started saving late, maxed out their 401k or currently maxing out all their qualified contributions, higher tax brackets. So within those examples can be business owners, doctors, dentists, financial services, tech industry is huge, engineers. One thing I'm going to add here as well, because of the 5 years, if anybody or any of the advisors you speak with would happen to know clients in the professional or semi-professional sports, that doesn't have to be your super rich, Kevin Durant's and starting pitcher for the Yankees. I'm talking about even semi-professional athletes that are playing, in the lower rankings of baseball or what have you. But bottom line is they like the 5 pay. And those people are still making a couple $100,000 a year. They're doing all right. They don't know how long they're going to be playing. So from a 5-year or a 5 pay standpoint, it makes sense for them. It is essentially an income play. We can utilize Kai-Zen for protection. Not very often. That would be a case-by-case basis that we would study. Know that it's an option, but I would say easily 95+% of the sales are primarily an income play. So the pre-tax split dollar plans here, it's probably another conversation. There's opportunities there for C Corps or nonprofits. Instead of bonusing an executive X amount of dollars every year, the C Corp or nonprofit could loan the client or their executive the premiums every year. The loan stays on the books to the corporation. It's a tax-free loan to the client, and it's essentially a enhanced split dollar, because then all of the Kaizen stuff still applies. We're leveraging on top of that. So no, that's an opportunity there. Informal funding or opportunities from a deferred comp or ESOP scenario. Key man succession planning. And the last one here is far and away the biggest. If we're talking about just a straight alternative asset class, is really what we're talking about there. Is you're going to find the vast majority of Kaizens are just a business owner, a doctor, anybody healthy, started saving late, who's concerned about taxes and needs some catch up because they haven't been saving enough, is going to do that. So before I open up kaizenplan.com, is there anything else you would like me to, or any questions, Nathan, that you had, or Richard, if you think there's something you would like to add in addition to what I'm saying, I'll let you guys do that before I pull up the website.
I'll see if Richard has anything before I jump in. I have a few questions.
Yeah, I have nothing to add at this point, Jeremy. You're doing a great job. Just we'll let it keep rolling here.
All right, thanks, buddy.
Then on my end, so just to address a couple of things, just who knows, I know you guys, this is specifically built off the IUL chassis. You don't do any whole life, right?
We do not, and it's not about how we, don't like whole life. We don't get into the IUL versus whole life thing.
Believe me, I have that debate enough. We don't have to go there.
They're fundamentally different risk profiles. So because of we do some pretty aggressive stress testing up above and beyond what any of our carrier partners ask us to do. So we throw almost black swan scenarios at our designs. For example, like we'll do a Great Depression era testing where it's 9 zeros in the first 15 years. We'll throw that into the plan. We'll stress test the bank loan and throw 1980s borrowing rates at it, like when LIBOR was 10, 11, 12%. So you'd be borrowing at that. We do that to every Kaizen design. And if it doesn't pass, we have to redo the design. The fact of the matter is, and again, I'm not slamming whole life, it just is what it is. The whole lives won't pass their stress test because it doesn't have the upside to make it better. You can't do 10, 12, 14% in the, in the whole life plan. So that's the short answer there. So, yep.
Oh, no worries. Other than then, I don't know if you're going to go over this, but minimums of like what's necessary to even, or what excludes people from this.
Yeah. So first, that's a great question. So with that being said, let me actually go to, so this is our kaizenplan.com. I trust this is what you're seeing right now is a website.
It is.
Okay. So this is what is available to you guys as well as any of the advisors that signs our selling agreement. So when it comes to minimums, first we got to talk about the carriers. So the carriers have their own requirements, and those requirements are for National Life, for example, is $100,000 of household income. So your client needs to be making 100,000 or there has to be 100,000 of household income. They're probably the most lenient, if you will, to get into. Allianz is another big partner of ours, and they have kind of a sliding scale where they want 150,000 of household income, and then there's a net worth requirement that kind of scales down from there. But really, you should be talking to people that have 150,000 or more, because here's the next reason I'll talk about that. Because of the minimum, the minimums are 1.5 million. So if I go out here, for example, we have canned illustrations for 1.5 million and 2 million. So if I just start showing you some of the ages here, so let's take a typical case. Let's make them a little healthier. So if I got a 45-year-old male preferred, his minimum premium, if he's using Allianz, for example, bear with me, is going to be the 35,000. And that'll, the older you are, the more money it's going to take to open one up. Here's what's interesting, and this is a new change. Nathan, are you familiar or hear about what happened here when the CARES Act happened?
Yeah, 7702.
They threw a 7702. So without getting into the weeds on that, generally speaking,
It was going to be one of my questions, though.
Yeah, none of the carriers even really knew about this. So essentially, the MEC laws hadn't been touched since the 80s, right? We're in a much different interest rate environment. So for especially these whole life carriers to make it endow, it just wasn't working. So we had to, they redid the MEC laws essentially. So generally speaking, if you have a client that's 40 or a client that's 50, if the premium is the same, we can squeeze the death benefit down lower. If the death benefit's the same, we can put more money into it. Logically, you would think, or intuitively, you would think, well, that means more income, right? I can drop the death benefit lower, which means lower costs, or I can put more premiums in, which means higher cash. All of that translates to more income. Two issues with that and why the carriers didn't immediately react. Number one, we just took all your comp away as the advisor, right? If you had a 45-year-old, let's see here, see this Allianz one, 45-year-old male, the total premiums here are 63,000. That means about 1.5 million. Okay. Well, with the new 7702, that's probably going to drop to, I'm guessing here, probably about 1.1 or a million, depending on the age. So that did one of two things. It dropped it's going to lower your targets considerably. And the carriers make money off of net amount at risk. Net amount at risk is the difference between the cash value and the death benefit. Well, if we dropped all the death benefit down, well, now the products aren't as profitable to the carrier. And we're figuring out, how do we not just give everybody a 40% pay raise or pay deduction? So what's happening is the carriers are trying to field goal that. How can we make the product still profitable and try and keep the comp the same? So some of the carriers have responded, some have not. Allianz, for example, this is not. They have chosen to wait. So this is not a 7702. I'm going to talk out of both sides of my mouth here now. National Life Group just came out here in the last 3 weeks. So their minimums are a little bit different not because it's any necessarily premium difference. It's just flat out because they're 7702 and Allianz is not. So let's go back to what we at that, the 45-year-old. Okay, let's go to the 45-year-old here.
Were you doing preferred before though?
Yeah, and 1 second. I just want to see. Yeah, that's still $1.5 million. Okay, so we don't have the million out here. Okay. Let me do $1.5 million. 45 preferred here. 1 sec.
No problem. Yeah, this is something that there's a few guys that would be interested in this. So this is good that we're going over, because we have a couple places that have higher premium cases, and we got even clients asking about, well, this 7702 thing, how does this affect the policies?
Yeah. So ultimately, this is where we landed. What we ended up doing, what really changes what part of the design is oddly enough, we may not even have to use term blend on some of the younger ones. Okay. So like National Life's product is 7702. Actually, after July 1st, it's all 7702. There's no, you don't have a choice of either or. Allianz is waiting till third or fourth quarter. They're our main two. We're, in more talks with Securian. You could write a Kai-Zen case with Securian today. We're just ironing some more things out with them. We utilize Emeritus, and then we were using PAC as well at the end of the year, but PAC hasn't even responded on their AG49A, much less 7702 yet. So we're kind of in waiting mode with them about, from product standpoint. So bottom line here is you could go out here, kaizenplan.com, and ultimately you could click on the carriers like Allianz and National Life. There's canned illustrations out here, and the minimums are essentially posted out here. So in a nutshell, 150,000, National Life is 100. But again, if I'm back to some of these minimums are 40, 45, 50,000, right? To get into. So you're not going to sell that to a client making 100,000 a year, right? He's not going to put that much of his discretionary income. So that's why we're generally speaking, you're talking about 150,000 here. So
that makes sense.
Yep. And go ahead. Do you have a question? Go ahead.
No, I was gonna ask, so kids, is there minimum age?
Yeah, 18. And that's the main reason that it's 18 is because the juvenile cannot own a trust. So remember, the individual's Kai-Zen trust is the owner. So your individual trust has to be the owner of the plan. So it is not available for kids.
And then for what about, so they're over 18 and the parents want to fund a plan for the kids. Is that possible through Kai-Zen, even though the kid doesn't have the income, or is that not possible?
You would want to check with the carrier, because you'd have a couple things too. Because remember, you're also, if you've got a 19-year-old or a 20-year-old with no income, you've got the carrier guidelines there. What you're talking about is a payor situation where the payor of the Kai-Zen plan is good, but you would also be putting $1.5 million plus on a 19 or an 18-year-old with no income.
Yeah.
So you would have a couple issues there. So I would generally defer to the carrier there. I mean, we have done in the past gifting type instances, but it hasn't been for mom or dad wants to start it on the 19-year-old. It's been, okay, generation one is 65 or 70. They're worth $30 million and they want to start a Kai-Zen on their 30 or 40-year-old kid.
Yes.
Adult. That's a much more feasible conversation we could have with the carrier, but it gets really tough just for straight life insurance laws. Is okay. There's always exceptions. That's why I'm not making blanket statements, but that specific instance of the 18, 19 or 20-year-old, you're going to have some skepticism from the carrier because they're going to think you're kind of robbing mortality. Because they would say, well, why doesn't that individual because if you got a 20-year-old kid, you're probably 45, 50 years old. That is the average age for Kai-Zen. So they would say, well, why don't you put Kai-Zen on yourself, is ultimately the question there.
Yeah. Hey, Nathan, this is Richard. I just wanted to add one other thing in terms of minimum requirements. The clients have to be healthy. So they've got to be standard or preferred at standard at worst, because obviously as ratings go higher, costs of insurance go higher, and most of the time, or many times, it just won't pass our stress testing. So
no smokers then?
Generally, now there's always exceptions if it's a younger client, and it's going to be in a case by case.
What you'll see with the tobacco is, how in these instances here, if I go up here to the 45-year-old, we're, the ratio between out of pocket and bank loan is about, 55, 45 or so, 55%, 45%. With the tobacco, you're going to see that more like 60, 40 or gotcha. 62, 38. You're not going to see this close. We're going to be out of pocket more, leveraging less when you're talking about a smoker. So it's harder. And you also see a bigger discrepancy between preferred smoker and standard smoker. So tobacco is not a no. It's just, they probably need to be young,
That makes sense. And then I know you're going to go over the website, but you mentioned the selling agreement. How would agents get access to that selling agreement?
Yeah, so basically I can email it to you and you could disperse to whomever, or I can give my contact info here. You could reach out to Richard or myself, anybody that needs it. So basically, the advisor signs our selling agreement. It's essentially kind of a boilerplate NDA. It goes through all of our agent splits and everything, but it basically says don't take our stuff or steal it or go to another, go straight to another premium finance vendor. Those just need to be signed and emailed in. Obviously, we don't need wet signatures or anything. And then once we have that selling agreement in, the advisor goes out to the agent login, clicks on website registration, and creates his login and password, and then we approve it right away. So that's essentially how that works. And again, I'll email that selling agreement to you, Nathan, and then anybody that would need one per se could also reach out to Richard or myself. Okay.
Perfect. And then because like I said, I know there's splits on the back end and Chew, and like I said, I know most of the answer to this, but the idea is you don't require anybody to get contracted with you. It's just a split business deal, right?
Yeah. That's a good point. Because there is a lot of times confusion with that. We're not the IMO or FMO, whatever acronym you want to use there. We are a finance vendor. So all that's happening is NIW is going on the app for a split.
Yep. Depending
on the platform, anywhere from 15 to 30%. The advisor and the advisor's upline, we ultimately don't care. It's inconsequential to us. That other 70 or 85% and who it flows up through and any of that other stuff is not, we're just flat out on the application. If it's Kai-Zen, because there's so much more servicing with the loan and the tranches, and we are literally on there for 15 years as plan administrator, is 30%. But again, I urge everybody, it does not matter if it's year 7 or year 9, and maybe even if the advisor does not have the relationship with the client, we are going to be around. So that's why Kai-Zen is a little bit more, and our traditional finance platforms start at 15, but those are all outlined on the selling agreement.
Yep, absolutely.
Okay. But just real high level, I won't go into too much, but there's a lot of powerful things out here on the website. So for example, again, if I'm clicking on Allianz as a carrier, first and foremost, there's great marketing materials out here. Everything from videos to brochures. These are all carrier compliant if they're out here. Okay. I went through the sample illustration. So this is how you would get the minimums. I highly recommend if you can, it's linear from here. So we've got sample illustrations for $1.5 million and $2 million death benefit. We want you to utilize these sample illustrations as much as possible to get the client in through step 1 of the process and get them medically qualified. It's not that we can't run custom illustrations and that we don't run custom illustrations, but we find that the advisors end up getting into the weeds a lot when they run too many illustrations, and it just never works. We're trying to promote concept there. So front to back enrollment forms and instructions are out here. Again, if you would click on National Life, it'd be the same thing. So it basically tells you step by step the forms needed, after step 2, here's step 2, here's step 3. So those, and we're here, by the way, we're not just sending you out to kaizenplan.com and, you're on your way, but they're pretty self-explanatory, detailed step by step there. The marketing videos are very popular right now because all of these videos, this mortgage analysis is a big one right now, mortgage comparison. It's a 2-minute video, but all these videos have little Vimeo links. So you could cut and paste this Vimeo link to like your social media platform, your website. So a lot of guys are promoting Kai-Zen by clicking on any of these links. So again, all of these out here have Vimeo links. We do a webinar every Friday, providing we're open and it's not a holiday, I guess, but kind of been known for this, but a lot of our weekly webinars here are recorded and out here. So it's a great training tool to go re-listen to some of these. Some of these you're going to look at them and it's going to show they're like 2 hours long or 1 hour and 46. don't worry. A lot of times the actual webinar itself is only anywhere from 40 to 45 minutes, but there's typically an hour or plus of questions at the end, because we can get 300-400 people on those things. So just know that when you look at these out here, there's a lot of great information on these. Don't let them fool you that they're 2 hours long. The actual kind of meat and potatoes, if you will, is generally 40-45 minutes or so. So those are out there. And there's great agent training videos out here as well. So again, Kai-Zen explained, Grace has a great one out here. Travis's look under the hood is great. This is really, really front to back, everything, you know, opening the hood, kicking the tires, so to speak, on Kai-Zen. There's just some great pieces out here. Going through comp, I mentioned the Tri-Zen deal for C Corps and nonprofits. Dane's got a great Tri-Zen video out here. I've watched that one a couple times myself for some refreshers. So you've got a lot of information out here at your disposal. Again, access is simply, you send us a selling agreement and you go out and register, and we'll get you approved. So questions, concerns, anything else from there, Nathan?
I think that's just about everything. I'm looking at my notes. Yeah, I mean, if you can send, I think I have one of the selling agreements, but if you can send me the one that you have, just to make sure it's current, that would be great. And then we just get that over to you if they send it over.
Yep, myself or Richard.
Perfect.
What I'll do is when I send the email to you, I know you have it, but I'll also copy. I'll copy Richard and have his contact info on there. You're probably best to just send it to both of us, or one of us will pick it up.
That sounds good. And then just your guys' role and who can talk to you and who we should steer away from. Tell me a little bit about that, because like I said, the guys that'll be listening to this specifically are marketers, so they're working with agents. Who has access to Jeremy and Richard?
We prefer to have that's a great question. And thank you for bringing it up, Nathan. It's not that we don't talk to advisors, right? But we don't have the bandwidth. So NIW specifically, we are designed and built to partner with the IMOs. We don't go direct to agent. We don't want to appear to be a competitor of yours. We are literally a finance vendor that has chosen to partner with IMOs. And Praxis is an approved IMO with NIW. So I don't, if you guys need me to help out with trainings, you got some advisors on the call, you want Richard or I to jump on a call, that's all good. What we prefer you don't do is just flat out turn right around and say, advisor has a question on Kai-Zen. Okay, here's Richard's contact information, or here's Jeremy's contact information. No, the main reason behind that is not because it's just because we don't have the bandwidth for do that, and they may get upset because they're like, hey, it's been a day, why hasn't Richard got back to me, or so we're always here. We're here to help you, but we would prefer to kind of help you guys, so you guys are more self-sufficient. And I understand that stuff is going to take time, so don't think. I hope that makes sense. What I'm saying is we would just prefer to. That's why I ask it. Yeah.
Because as examples, because I know the guys are going to hear this, we have what we call affiliate marketing offices. So there's other places that have a decent amount of organizations and independent agents or agents that they're working with. So people like Wella Financial or Solving Life's Puzzle, or there's not the Game Plan Financial, a smaller shop, Game Plan Financial, Hall of Fame Financial. So everyone that's listening to this, the marketers, what we call the business development advisors, that's a small group of people, and they may have, like I said, lots of different agents that they're working with. It sounds like those guys, those marketers and AMOs, they could ask and give you guys a call for certain direction on things.
Absolutely.
They want to set up a webinar for 20, 30 agents to join on, then they can give you a call and schedule something like that.
Yeah, correct? We'd love to do that stuff. All day long.
Perfect.
And again, I know that maybe more, especially in the early time, we understand this is a process. There's a lot of information. It can seem like, the proverbial drinking from the fire hydrant, and the beginning. So it's all good there. So no worries at all. But yeah, that's just that. They're all welcome to call us. We're happy to do trainings. Again, the main thing is I think it's best that they just don't blind transfer people to us.
Yeah, absolutely.
Because then we don't know who those advisors are either. And we want to make sure they're tied in our CRM to the right people. So,
Yep.
Great. And thank
so
you.
everyone that's listening to this recording, Jeff, Sylvester, Kathy, Dennis, Ed, there'll be a bunch of other ones that I'm sure will hear this as well. So sorry I'm missing your name, but you guys will have Jeremy and Rich's contact information in our master sheet, so that you guys know who they are and what they do and when to call them. But yeah, don't, as they said, if you have an advisor to ask questions, you can give Jeremy Rich a call and set up something for a large group, but don't just pass on the information. Let's try and protect Jeremy and Rich's time. We'd like to continue to work with them.
Yeah. And it's advisor experience too. We want to make sure the advisor is taken care of too. I think it just seems to flow better when we're promoted as a partner with you guys, as opposed to just somebody that can help with their finance. It's like, no, we partnered with the finance firm that does over 5 billion, et cetera, et cetera. And then it just comes across as we're, again, walking side by side with, we're in step with what you guys are doing. So,
yeah. And
all right.
Last other question that I have on my end, because I know this would be helpful for some, and we don't have to go into it in detail at all, but just so that they know it's there. Yeah. I know you guys have an exclusive agreement as well, and I know some of the places that it probably wouldn't apply to anybody right now, but talk just a little about that, because some of the marketers that are calling out and we're bringing on other affiliate marketing offices, there may be a large shop that starts using Kai-Zen and is like, well, this is an amazing platform. This would be their only premium financing place. Just a 1-minute overview, just so that these guys know that there is an offering on that side. If someone wants to say that, talk a little bit about that side.
Yeah. And another good question. So we have a preferred platform. Essentially what the preferred platform is it gives the IMO and the advisors access to, it's basically an electronic online point of sale. It's an agent portal, client portal, and point of sale. It allows you to present Kai-Zen, whether you would be using your laptop next to the client, doing a screen share like we're doing. It's been something we've developed over the last 2 years, and really the advisors using it, I've hit it out of the park. So that's our preferred platform. What we did is we didn't say it's like, you got to pay us to use Ilya. We're not charging you a monthly subscription fee. It's a preferred selling agreement. The preferred just says you're giving NIW right of first refusal on your finance business. So if you've got a finance case, you come to us. If it is not in our wheelhouse, we don't want it. It doesn't fit our, it just doesn't fit our guidelines. Then great, it's independent distribution. You go to whomever you want. But that would be something we would want to, if somebody, this would be something for a medium to a large size group that would want to take that on. It is an excellent tool. That's something we could maybe go through at a later point. But that's something that anybody could inquire, and I could be happy to go through on a case-by-case basis if there would be preferred opportunities there. So,
when you said medium large, just so I know, how many?
We would want you. Yeah, we would. We would want somebody to be able to do realistically once they got going. I know you can't flip a switch, but could you be doing 300,000 to 500,000 of target with us
on a yearly basis?
Yeah.
Yeah, if someone's actually in that space and doing that, I know that wouldn't be terribly difficult.
Yeah, it's really you'd be talking about can you get 5 to 10 advisors utilizing the platform and having writing 5 to 10 advisors writing 3 to 5 Kaizens a year, right? Is ultimately and that's something that, again, we completely understand that that's nothing anybody can do overnight. That's implementation, and that stuff doesn't come quickly, but that's ultimately what that looks like. But again, I'd be happy to talk through that for anybody that wants to do that. Close ratios in that platform are considerably higher as opposed to selling off of an illustration. So it's something to think about, and again, just get back with me on. So
Perfect. No, I appreciate that. I know we're a little over time, so I appreciate you spending a couple minutes extra, but this has been extremely useful. I know this will be helpful for everyone that's on, so I'll make sure that everyone gets the recording, and then yeah, we know where to find you guys. Jeremy, where are you guys located at?
So I am actually in Metro Minneapolis. It's Southwest,
that's right.
South Metro, a suburb called Eden Prairie. And then Richard is actually out in California.
Ah,
so, I'm in San Diego. And of course, NIW, our headquarters is in Dallas. So we do have an annual university training 2-day deal once a year in Dallas. So, you know, as your team gets rolling, I'm sure they'll want to attend that.
Yeah.
Right. That's something we'll be communicating with on once we get closer to that. That'll probably be the beginning of next year. We're ways out. So are you guys all over, Nathan? I should ask that for you. I know you're in Chicago, but
so Illinois probably is where I am. So that's our main hub. And then we have a few of the places out here. We have a presence in Texas, in California, North Carolina, and I'd say those are the main places. We got some people in Florida too. But yeah, we're a little like the main AMOs that we work with. Those are the main places that they are.
Okay, perfect. Well, again, I thank you for your time again this morning. Looking forward to working with everyone, and you guys. I guess everybody have a great weekend. It's only Thursday, but you know.
Yeah, it feels like a short week though with Memorial Day. So
it does.
I appreciate you guys' time too. It's good to have the introduction, and excited for the information. We're looking forward to continuing our relationship with Kai-Zen.
Okay, thank you. Take care.
All right, everyone, have a great day.
Yeah, take care.